Welcome to our Property Sisters UK channel. It's Ruth Hobbs here, one half of Urban Sister Developments. We are commercial to residential developers. If you've not been here before, we are a collective of the most successful female developers and entrepreneurs in the country, and each of us will be uploading content here on this channel. Today, we are joined by Jake Baker from Peritus Finance, who is a specialist on residential and buy-to-let mortgages. So welcome, Jake.
Thanks, Ruth. Appreciate the intro there. First of all, I'll just quickly apologise for the hat and t-shirt today. I've cycled into my office, but I'm sure you can all forgive me for that. So as Ruth said, I'm one of the directors here at Peritus Private Finance. I specialise in the residential and buy-to-let market in particular, with a keen focus on working with SME developers with regards to whether that's buy-to-let portfolios, individual buy-to-let, the beginnings of development finance, bridging, etc., alongside all of your residential mortgages. So I've got quite a broad knowledge when it comes to mortgages generally.
Fantastic.
Yeah,
so it's like it's the 22nd of June, and the market every single week seems to be changing and moving. I mean, I can barely keep up with it myself, and I think that's the purpose of this call, this 10-minute call, just to kind of race through what you think, Jake, as the expert in your field for residential and buy-to-let, what is happening.
Yeah, so there are changes afoot every single day, and I've been in the industry coming up to 7 years now. So I my witness the first crash while being a part of the industry. As a family business, though, I did see it firsthand via my father when he was involved. But even he's commented that at this stage, things seem to be changing at a far greater pace than he ever witnessed with the last crash. The biggest talking point, I think, Ruth, as we touched on earlier when we were having a little chat, was first-time buyers. 90% mortgage at the moment or higher is, for most people, just not possible. Lenders have pretty much retreated from the market, and that is more challenging than ever has been before. Certainly in my time in the industry, I've never seen anything like this at 90%, although rates over the recent years have reduced massively, I would say, leading to a point where when I first entered the industry, 90% rates were at the 3.5% mark. They are now moving back towards that level with, I have a client who I just quoted terms for this morning on one of the few 90% products that are available at 2.69%, I believe it was, on a 2-year fix. So, rates they're not horrific at that point, but they are certainly more expensive than they have been recently.
I mean, we're out at the market at the moment, and I am gobsmacked because we're having to offer at market value or over to secure properties at the moment. I went on a viewing, there were 17 people, not all waiting to go in, social distancing. And I'm just really on the one hand, you've got the market tanking, and people losing their jobs. And on the other hand, I feel that, especially in the Midlands, it's a real bum fight out there to get property. And, in terms of first-time buyers, do you think that they will be restricted to enter the marketplace? Are they not able to raise, their deposit finance? Do you think that will slow the market down?
Yeah, so I think it may have an impact in the short term as people try to cobble together deposits. But I do also think the Bank of Mum and Dad will come into play. Often referred to as the largest lender in the UK is the Bank of Mum and Dad. And typically, most first-time buyers I see, unless they've been very fortunate to work in a high-paying job from a young age, which, let's be honest, so few are, then inevitably it's a real struggle to save more than that 5 or 10% deposit. I remember buying my first property. My mum and dad helped me out. I know quite a few of my friends, when they bought their first properties, they've been fortunate where their parents have helped them out too. It is a struggle. I think it will be difficult, and especially as younger people lose jobs or are unable to be promoted to the level that they thought they would, or as quickly as they wanted to be.
What do you think lenders are particularly concerned about right at this moment?
I do think viability of business is a key one. For self-employed clients, one thing that I'm seeing a lot of on the regulated side is whether a business has been affected by COVID. In previously where a lender would ask for the last couple of years SA302s, the last couple of years accounts, now that's actually been replaced, well, not necessarily replaced, alongside that, they're asking for the last few months' business bank statements. There are loans have been taken out, so why and on what terms, which is, it feels like some businesses are being punished slightly by lenders for taking advantage of and bounce back loans, when actually all they're trying to do, businesses are survive and reinvest into themselves in order to get through this difficult period. And actually, I think, there might be another 6 or 12 months of difficulty for some businesses, but some businesses are currently thriving. We had a firm out to our office this morning who were checking on putting polycarbonate screens up to make sure that we could get back into the office and obviously still maintain a distance and hopefully help stick by government advice with regard to that. Clearly they're a business that's thriving at the moment. They're on a 4-week delay, whereas previously they'd never even looked at offices before COVID. So for them, they're actually thriving right now, which is, it's nice to hear some success stories in amongst what's going on. But,
are you busy? Have you got lots of stuff going on? Are you busy?
Yeah, dare I say it, the busiest I've ever been since entering the industry, which is fantastic, but also challenging because lenders are, the criteria is harder than it's ever been, and more varied than it's ever been. Whereas typically high street lenders in the past, you knew they would all be roughly around that same level or the same points on certain criteria. Now there's bigger division open up between the lenders as to what one will do and what another won't. I'm seeing a lot of refinance work. One of the hardest things I think has been for us who are trying to sell stock. Ruth, I'm sure you've seen that yourself. It's difficult when you've got that impact on the first-time buyers at the bottom end of the market. It affects all the way up through the chain, because if someone can't buy that property, they can't. It goes all the way up and on and on and on. A real impact. But yeah, we're busy with a lot of refinance work. There are still quite a few purchases going through. There are quite a few first times, which is actually quite surprising. But I think these are people that have been ready to move before COVID has hit. When it hit, then that pent up demand, but no supply. And now it's like the tap's being turned back on again. Whether this continues in the next 6 to 12 months, as possibly more unemployment hits after the furlough scheme ends, that will remain to be seen.
So you're probably thinking that towards the latter part of the year, things will really slow down in the property market, you think?
I don't. From a selfish perspective and from the economy as a wider, as a whole, really, I think it will be very difficult for there to be a situation in which the market doesn't slow down a little, because I feel like it might be slightly overheated at the moment. I think that the 12 or 14 or 16 weeks that people have had stuck indoors is going to drive demand for a different type of product. I think what we'll see is that we might see more demand in rural or semi-rural areas, certainly the suburbs. And I think actually inner city living might become less of a popular option, certainly for people who have owned properties before. I think if you're first time buyer, you're probably still going to be happy to take an apartment in the city centre, something like a studio or a one bed. I think if you've already been living in the studio or one bed, you'd probably rather move out to the suburbs by this point, because let's be honest, having a great deal of time stuck in a small space is challenging. I think the lockdown has challenged people both physically in terms of their exercise requirements, but also mentally. And I think mental health is incredibly important. And I think it has been an issue for a lot of people over the lockdown period.
Yeah, I totally agree. And, we're looking at ways we're redesigning internals of flats and houses to make sure that we COVID-proof our business going forwards. I think that's one thing. Yeah. It's really interesting because we had one of our mortgage lenders come back and say to us that, that they were unsure about us putting bathrooms into every single bedroom. They weren't sure that they were going to allow that, but we've gone back to them and said, well, actually, this is for the health and safety and future proofing our business. We actually need to do this.
Yeah.
It's it means people aren't transferring germs and all the rest of it. And in terms of student accommodation, parents are looking to put their kids in a safe property where they're almost self-contained
Yeah.
a little bit. So I think mortgage companies have to kind of speed up as well and realise that, you know, developers are switching up their products, you know, to meet this kind of demand, this new kind of product, as you said, Jake.
Absolutely, I agree with you. I think students are a prime example of that, because I think a lot of the PBSA blocks, the larger blocks, will be woefully unprepared for this. And I think, you know, SME developers can probably lead the charge on this, because actually this is an area where they can be more agile than some of the bigger players can be. I mean, and I think that will come through in the end product.
Yeah, our building that we won the Best HMO Deal of the Year award at the Property Investor Awards, we was quite a small halls of residence. So we had 3 flats, and within those flats, unbeknownst to us, we've actually developed like a COVID model. So everyone's quite self-contained in their rooms. There's, you know, 6 people in a flat. Excellent. They've got outside space, all the rest of it. So we were very lucky. When we halfway through COVID, we thought our business was going absolutely down the toilet, and then we found our way out of it, and we realized we had a perfect model going forward. We need to make some slight adjustments, but you know, it's really important for all developers to adjust their product. You're absolutely right, and make sure that you've got longevity in your product now. So yeah,
absolutely. I think now more than ever that becomes important, and I think that as demands change for stock, housing stock, that will be borne out by developers, but it's those who react quickest who will probably come out best as a result of that.
We're just coming to the end of our recording now, and that's fantastic, Jake. Have you got any last one kind of final thing that us developers, or even first-time buyers, is there anything that we need to concentrate on to make sure that we, you know, we're getting our lending, we're getting our revaluations, you know, we're getting all those things through?
Yeah, I think one of the most important things at the moment for me is the story. When you're chatting with lenders, whether you're running your own business, whether you're a developer, whether you're a first-time investor, a first-time buyer, excuse me, whatever it might be, I think what is absolutely crucial at the moment is ensuring that there is a good explanation as to why, if you have taken a CBILS loan, a bounce back loan, if you have been furloughed, make sure that it makes sense what you're trying to do. And if it doesn't make sense to you in the first place, why would it make sense to a lender?
Yeah,
that's the thing. The underwriters are strict for a reason, because they have to be. And from my perspective, I've seen too many clients in the past, and as this has all happened, gone, well, this would have worked before. Why shouldn't it work now? Now more than ever, we're in a tough economy, and we have to ensure that if you have taken a CBILS loan, explain not just that you've taken because you needed it. Tell us the story as to why. Tell the lender the story as to why you've taken it. I've taken the CBILS loan because I'm going to reinvest, because I'm going to this is going to help me grow, to future-proof, to COVID-proof my business, to protect our future supply of properties. And that is vital now more than ever.
I absolutely love that last bit of information. That's a real high-value piece of advice to all of our developer ladies and entrepreneurs. So thank you ever so much, Jake. If you want to get in contact with Peritus Finance, all their information is below in the description, so you can just click on the link and get in touch with the guys. They've been really, really helpful to our business. So I just want to say thanks ever so much, Jake. Fantastic, loads of learnings there for everyone, and I'll see you again in 2 weeks.
Lovely. Thank you, Ruth. Thanks for the time.
See ya.